The big monetary inflation is the thing. Where do I store my wealth? All currencies have died. All currencies have devalued or died. I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin, and they want to do that in a bigger way, like buying gold or something in a bigger way, and then there's more transaction. They lose control over that, and that's an existential risk. So yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk. Watch the total value of Bitcoin right now is a little over $1 trillion. Total value of bonds is about our bonds is U.S. dollar bonds, about $23 trillion, and so on. Not only watch the price, although in Bitcoin's case the demand caused the price. Watch the total values of those things, and as those, plot it on a chart and watch those things and watch the flows. Because if you start to see that kind of thing, you could almost see, like the blow off, and then that kind of reversal. Just to put it in perspective, some other numbers, like there's a little over $1 trillion in Bitcoin. If for gold, if you take out central bank ownerships, because central banks won't own Bitcoin I don't believe, for various reasons that I could digress in, as an asset. And if you take out jewelry from gold, then you have a bit over $5 trillion. So if you were to look at it now, and you were to say what's a person who wants a diversification of those two things, it's about like 80-20 right now in the world. So that's something I'd watch too. But I think those things probably are going to rise relative to the bonds, and it would transpire that way. So you want to watch those numbers and see how those go.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
What happens to the markets is that when you go to those other things, let's say you go to stocks, you go to real estate, you go to other things because they're getting out of that. As those prices rise, like a bond, their future expected returns go down. And as they come closer to the interest rate, so now you've got whatever the interest rates are, it depends on the country, but it comes down, then there's no longer the incentive to buy those things, and you could have trouble. And it becomes very difficult to tighten monetary policy because the whole thing falls apart. Everything's interest rate sensitive. And so the central bank has got to then print that. Then you have negative real returns in stocks and other assets, like we did in the 70s, but the nominal return goes up. That pattern has happened over and over, and I'm just trying to describe the mechanics of it. These things come across about once in a lifetime, the problem with most people is if they didn't experience it, they don't understand it. I think it creates this environment. I would recommend to anybody who's interested, I put it on LinkedIn, my study of what's called the Changing World Order, and it goes back and it shows the patterns of there, because it's like if you were in the 20s, you're experiencing the 1920s and so on, and you cannot imagine what's ahead because it hadn't happened in your lifetime. The New World Order. So we're in a spot of the cycle. it's not just about interest rates. It's about the whole enchilada, and that could be financial, which has to do with taxes and then trying to escape taxes and then trying to control and all of that dynamic. And then it has to do with conflicts between the left and the right and the capitalists and the socialists and how they can be with each other that affects the environment. And then it has to do with the changing world order in terms of China and the United States and so on. So your children will really, in order to understand what's likely to happen over the next 1, 2, 3, 4, 5 years, you really need to go back and study what happened in the 1930-45 period and so on and so forth. And so I'm not going to be able to summarize that here, but I did put that description out there for those who are interested, because you've got to be prepared for all of those possibilities.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.